Another stock that will be on our radar, I mean, it continues to be in the news for all the wrong and now the right reasons, is Jet Airways. The company says they will reinstate 50 flights from the 31st of March and plan to operate 75 planes by the last week of April. But the issue itself continues to dominate mindspace, both for passengers as well as investors. So here are some thoughts coming in from the Civil Aviation Secretary, Pradeep Singh Kharola, who says that they are on top of the situation.
As you have been observing that we are keeping a very close watch in the ministry over the developments in Jet Airways, and in the same sequence we had a meeting with the management of Jet Airways. And as you all know that yesterday SBI has announced the resolution plan. So our role in the ministry has been that the financials are between the lenders and the shareholders and the promoters. Our concerns primarily have been that passenger safety should not be compromised, and at the same time the passenger should not be put to any amount of undue hardship. Today 35 planes are flying, and henceforth no more additional planes would be grounded. With this interim funding coming into the system, with the infusion of cash, how would the restoration of these aircraft be planned? So they said that an important element over here would be that they have to discuss the matter with the lessors, and now in the next 3-4 days that would be their top item on priority, that they will be discussing the matter with the lessors. As per the plans given by Jet, they are hopeful that by the end of next month they would be able to fly about 40 more planes. The aircraft belong to lessor. If you have to cannibalize, the lessor's permission has to be taken. The lessors are very strict on this. No lessor would allow, their own aircraft to be cannibalized. Generally, the leased aircraft, which are from the lessors, and once they have given a notice for grounding, they come and verify all these things. So our assessment is, and that's what we have been told also, that the grounded aircraft are in a good condition. Yes, there are some aircraft grounded for maintenance also, and maintenance takes time. And maintenance may take anywhere between 30 to 60 days.
Okay, let's move on then. SP Tulsian of sptulsian.com is now with us. Mr. Tulsian, good morning. Thanks a lot for joining us. Since stock of the day yesterday was Jet Airways, your thoughts now on the stock? We discussed in closing bell yesterday, and you suggested some strategies for traders, but now it's back in ban. So obviously today those strategies can't be taken. But for investors who bought in at 220, should they continue with this, or is it time to book some profit?
Senuj, let me first give my view on the aviation sector. That I've seen many experts saying they have all the rights to say that the aviation have never made money, and this is not an investment worthy stock. So sometimes I wonder that why Indigo should have a market capitalization of 55,000 crore when they have a top line of maybe about 32,000 crore against Jet having a top line of 25,000 crore. If you are not so convinced about the aviation sector, exit from the Indigo. Why to give a market cap of 55,000 crore? Because even they have posted losses in the previous quarters. So yes, the things seem to be quite changed for the aviation sector, and more especially in the Indian atmosphere. And as I said, which I have been maintaining my extremely positive view on the premise that new promoter will come in. Actually, people have been talking earlier that probably banks will run for 1 year, which is not feasible, and all sort of things. Now, all those speculations are seen behind the process of the induction of the new promoter has having been invited by the lenders on a very transparent manner. Even Jet and Etihad, that is Naresh Goyal and Etihad, can also participate in the process if they wish to, as the ground has made for the strong players to come in. And in fact, maybe with 90% stake, he is now at the hands of the lenders. In fact, I'm saying 90% because 24-25%, which is now held in the public with the retail people and with the public, will also be qualified for the open offer tendering. So if you take 50% by lender and maybe the authority of for 41% held by the Naresh Goyal, all at the disposal of the lenders, will give a clean entry to the new buyer into the company, which has an extremely immense potential. And even if you go by the enterprise value, I think all these things will work out at maybe 12,000-13,000 crore. add the creditors or the liability of about 8,000 crore, you are getting an airline at 20,000 crore EV against maybe 55,000 crore EV of Indigo, which is 1.2%, which is 120% of the size of Jet. So yes, a lot of potential are seen. In fact, I have only been giving my near-term target of 265, 270, which got met yesterday. Then thereafter, I raised it to 295. These are all for the short-term traders. And you are right. Yesterday, a lot of F&O opportunities were available in the F&O space of buying April call or maybe selling April put. But today, again, because of the ban, that opportunity has gone. So now the only window is that you be an investor, and if you keep a patience, allow the new investors to come in, keep an hopes, and if you only have to have the positive view on aviation sector, and if you have that, then probably Jet Airways seem to be the best stock even at the current level of 270, 275 as an investor.
Okay. Good morning, Mr. Tulsian. And now for the other big news that we broke yesterday and that got confirmed today, that GMR is selling 40% stake in the airports business to three large investors. Does the listed GMR stock appreciate because of that anymore? It does appear that there is a demerger in place, and the energy and highways business may not really benefit from this money.
See, Lata, in fact, GMR restructuring, monetization, debt reduction plan have all seen, moving in a confused manner for last 4 or 5 years. First, they went for monetization of road assets, thereafter the power assets, and now the airport. If you really take a call, they have 63, 64% holding in Hyderabad and Delhi. In fact, two are the main. This one, I'm not taking a call on their other airport assets, which are not seen to be having much value. So yes, both the things are, now it's a matter of valuation. If you're inducting any investor in your subsidiary, because even they earlier explored the possibility of airport subsidiary coming out with a public issue, which did not work out. So yes, the things are seen to be all fluid, because the non-monetization of the land assets, which they had of about yesterday afternoon also I've said that they had opportunity, or they had the potential to monetize 252 acres of land. Of the 5,200 acres of Delhi airport, 5% can get monetized by or can use for the non-aero purposes, which they have failed in this last 10 or 12 years since they have been, operating the Delhi airport. So yes, even if the new investor comes in their airport vertical, I think that will more be to utilize the money for either for carrying out the operations of airport business or partly for reduction of the debts, which will not be seeing the significant accretion in the share price of GMR. Yes, if the GMR airport is vertical plans to go for public, then probably that will be seen as positive. But yes, this will be having a positive impact, but that has already seen played out in the share price in this last maybe 1 week or so.
Okay, yes, the stock is up almost about 20% in the last, yesterday it was up about 13%. I mean, just look at that move there. But Mr. Tulsian, I also wanted to ask you about, M&M, etc. I'll come to that in a bit. We have a couple of brokerages that we're going to talk about. Our colleagues are waiting by, so let's go to them. Macquarie has upgraded Strides to outperform. Ekta here is with us to tell us about the rationale behind that report. Hi, Ekta.
Hi, morning. Well, yes, absolutely. Strides has been a very volatile stock, and today this would probably come as some amount of reprieve, where Macquarie has upgraded the stock to outperform with the target price of 532. Now, one of the key things is that according to them, analysis which Macquarie has done suggests that bulk of Strides' US portfolio has in fact been gaining market share, and because of this, they expect the US margins to eventually expand as well. So it was around 11% in Q3 of FY19. They expect it to probably rise to levels of around 18% in FY20. They also are expecting stronger visibility in other markets, other regulated markets for Strides, and they expect improvement in the branded Africa business that Strides has had a strong presence in, as well as bottoming out of the institutional business, which is basically all of the anti-aid tenders, etc., globally, which have seen price erosion. So eventually, they expect the lower debt which Strides could probably undertake in terms of lowering debt to triple the Strides EPS in FY20 versus FY19. The key risk, according to them, is a delayed US ramp-up.
Okay, well, thanks a lot, Ekta, for that. Mr. Tulsian, just coming back to you, I was asking you about your views on Mahindra & Mahindra. I mean, we did get a chance to speak with the head of the tractor business yesterday, and he indicated to us that FY20 will also be a single-digit growth year. Your thoughts?
See, Sonia, in fact, if you really see the tractor sales performance for Mahindra & Mahindra, and I compare it with the Escorts because that's the only listed space available. I'm not comparing VST Tiller because that's a very small player. So Escorts have seen maintaining double-digit growth till now, and even we are expecting Escort sales numbers probably amongst the automobile sales. Probably Escorts will be the only company which will cheer the street on the March monthly sales numbers, and that's the reason we have been keeping positive bias on that. Now, coming on FY20, I think it is all futile to take a call that the growth of the tractor sales will be seen in single digit because it all depends on the monsoon as well, because monsoon effect will be seen for the tractor sales for the Rabi seasons, which will be seen in the month of November. So I won't be taking that call at this stage, and I doubt that the tractor sales will be seeing the single digit. In fact, I'm keeping the maybe slightly anywhere between 12 to 13% sales growth in the tractor, because those data can always get revised. So yes, if I need to take a call on Mahindra & Mahindra, probably they have seen not enjoying the better growth in this last 2 or 3 months which we have seen vis-a-vis the Escort. So yes, maybe if you take a call on the tractors alone, then probably Mahindra & Mahindra may not look attractive. But I'm taking the entire Mahindra & Mahindra package along with their investments held in their all listed subsidiaries and the automobile space. Probably Mahindra & Mahindra also seems to have bottomed out, but we are keeping, as I said, that we are keeping positive view on Escorts. We are looking from the monthly sales figures to be seen from all automakers for the month of March.
Okay, Mr. Hussain, what's driving this move in NTPC? It's up 20% this month. I mean, it rarely moves like that. It's one of those boring stocks, but this month has been phenomenal.
See, Anuj, difficult to take a call. Maybe the regulatory moves, which have allowed the returns kind of things to the utility company and all sort of things. But I have not seen these prices really sustainable. Maybe, once the things, reach to its value, it can swiftly correct as well. Because if you really take a call on NTPC and Coal India, both have really seen the laggards and both have really deceived the investors, those who have taken an investment call on both these stocks.
Okay. Well, we have another set of stocks to ask you, Mr. Tulsian, Realty. But before that, some details of an HSBC report. They have raised the target price for DLF to 216 rupees after the QIP. Sonal is giving us the major details. Sonal.
Well, Lata, they are positive after the QIP decision that the company has taken. The QIP was announced at a 16% discount to the price at which the promoters infused money into the company. They say that it removes a major overhang from the company. They're saying the governance concerns are also gradually going away. This is something positive. The underlying market, according to them, is showing signs of improvement. The commercial real estate segment particularly is doing really well. The rentals are increasing, the vacancy levels, they are going down, and the Gurugram market is showing some signs of recovery as of now. DLF currently has an unsold inventory of around 12,300 crore rupees. So this is a trigger. They will see by when they are able to liquidate this particular lever. They are also saying that the key residential market is also beginning to show some improvement, and DLF will benefit from them. Currently, the commercial segment actually has 57% revenues. So this is a major trigger for the company. They maintain hold as of now because they are waiting for DLF to regain the sales momentum. However, they have increased the target price to 216 versus 185 earlier. Back to you.
Okay. Thanks a lot for that, Sonal, for the details. Mr. Tulsian, DLF itself and any other realty stock?
See, Lata, in fact, maybe DLF could be seen as a real estate stock because of the debt reduction which we are seeing on a standalone basis. Company will become a debt-free company, and maybe on a consolidated basis they will be having a debt of 6,500 crore, and they have the prospects of the REIT model also, because a lot of properties on the annuity. But in spite of all these things, and more especially with the reduction in GST, our focus is more on the companies which are having the unsold properties in their portfolio and having presence in southern pockets of India. So taking that into consideration, rather the 3 or 4 stocks like Prestige Estate, Purvankara, or maybe Brigade Enterprises, they are looking better because of the better sales seen in the pockets like Kochi, Chennai, Bangalore, Vizag, in these pockets where these all 3 developers are seen to be present. So yes, in the pecking order, probably we'll go with or even we don't mind taking a call on India Bull Real Estate also because of their completion of the Worli project Blue, which is a very big project, and that will get booked into the financials also. So maybe in a pecking order, we will rather keep DLF on number 4 or number 5 over these 3 or 4 stocks which I have stated.
Okay, so I also wanted to ask you about the oil marketing companies which have been the big gainers this month, but I'll do that on the other side of the break. We have about 4 minutes left for the pre-opening rates to kick in. Don't go anywhere.